The non-farm payrolls saved the dollar. Or did it? My name is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for June 8th, 2025. I know it's actually June 6th. I'm filming this on a Friday, but it's for the weekend for next week. We got a lot to talk about. Next week's going to be the inflation week, CPI and producer prices. But a little housekeeping before we get started. This is going to be a fairly short video. Two reasons. One reason, Nick from Trading Analytics is not going to be here today. He is traveling. He's in Florida right now, so he's not going to film his piece. Second reason is I'm going through some personal things that I have to take care of. So this is going to be a fairly short video, so excuse me for that. But I'm still going to give you the top 3 trades from last week. I'm going to review those. I'm going to give you the top 3 trades of this week. I'm going to go over all the different markets. I'm going to cover what's happening this next week. I'm just going to do it in fairly short fashion. One of the things that I really wanted to discuss, actually a couple of things. You had this Donald Trump, President Trump, Elon Musk tussle that's happening. It's happening very publicly. I assume that's going to subside over the weekend. We're going to end up getting past it. There's too much political, President Trump has way too much political capital put into this bill that he's trying to get passed. So I think he'll tone his rhetoric down. And Elon Musk, I don't know if you guys have seen it. Take a look at Tesla. If you saw what happened yesterday after those headlines, Tesla, actually, that's not Tesla. I typed it wrong. Here's Tesla. You can see what happened with Tesla yesterday. It really sunk. Now, Elon Musk says, money doesn't matter. It's all about principle. You can't pay him off, if you will. But the fact of the matter is, Tesla is suffering as a result, and that is that's probably going to have him tone down his rhetoric a little bit as well. So there's that thing, and then also, U.S. and China they've talked. And they're going to continue. They're going to take another step in talks. And you would have thought between that and the jobs report today, you would have had the S&P breakout. Now, matter of fact, let me put us on the week ahead chart so you guys can see. You would have thought that would have been a catalyst that would have driven us well above 6,000. Both of those things today. And as you can see, the S&P is really struggling up here now. I don't necessarily think you should be turning bearish right at the moment, but it is a concern. The fact that between a good jobs report, between China and the U.S. making progress on talks, there is an argument that the S&P should be a lot higher than it is right now, and it's not. And I think that is a bit of a concern as we go into this next week. Now, like I said, next week, we do have producer prices and consumer prices. Consumer prices on Wednesday, producer prices on Thursday. That is going to be very much a driver as the market is expecting, hotter inflation data moving forward. So if that is truly the case, that could actually weigh on stocks during the week ahead. All right. One of the other things I want to mention before I get into the actual charts of the different markets, and you can follow along via ForexAnalytix. You can go right over here to the calendar. There's a lot of different tools that you have with ForexAnalytix. You have the Live Squawk, you have the PIQ news feeds that you can see and scroll through those. You have your economic calendar from investing.com. You can just adjust the dates and pick which dates you want to do. I'm just going to go through some of the stuff so you can follow along as well. But remember, you have analysis of 30 different instruments. Different types of analysis. Whether you're talking about Elliott wave analysis, whether you're talking about harmonic analysis. You have macro analysis, basic technical analysis, all updated throughout the course of the week on different instruments. We cover crude oil, which, by the way, will be on one of the trades at the very end. I'll talk about crude. We got silver, we've got gold, we've got boons. You have auctions next week, a 3, 10, and 30 year. So, wouldn't it be nice to have analysis on fixed income? Well, you get it here in ForexAnalytix. So just because it says Forex doesn't necessarily mean we only cover currencies. That is absolutely opposite of what we do. We cover almost everything. So with all that being said, let's talk about some of the things that are going to happen this next week. I'm going to show you just a couple quick charts, and then I'm going to get into the trade setups for the following week. So follow along with me as best you can. Like I said, you can follow along via ForexAnalytix. You can follow along via calendar. Okay. And I'm going to use the charts that I use here on the week ahead video. So this way we can continue to talk about all this. All right. So as far as the dollar MEX, the reason why I'm showing you this is because we have Mexican CPI coming out on Monday. Now, I don't think it's going to be a huge driver, but what the problem that you have here is if Mexican inflation is strong, the peso has been nonstop. And you guys know I drew this out literally weeks ago. And obviously we haven't looked at the dollar Mexican peso in a long time. Back when I drew this, I said, hey, we're probably going to rally back here to 1980, and then we're going to sell off. Well, that's exactly what's happened. And guess where we're at? We're almost near the $18 handle, which is an important level of support, but also we have 161% extension of this last move. It comes in at 1901 or 1902, depends how your fibs are drawn, or 1905. That's going to be pretty important support. So I have been, and if you are in the ForexAnalytix community, you're following along the trades room. This is the trades room. You can see what trades I'm in when you're in ForexAnalytix. If you want to know when I'm scalping in and out of the dollar, or, you know, and not just myself, you can see there's so many great traders in here posting exactly what they're buying and selling. If you want to know exactly what I'm doing and how I've been shorting the dollar Mexican peso pretty consistently multiple times over the last several weeks, well, you know, be a ForexAnalytix subscriber. It's only $1 for 10 days to do that. All right, anyway, we have Mexican CPI on Monday. So if we have hot Mexican inflation data, there's a good chance we can test that 1905 level. Now, what we do from there, I'm not sure. I would be, you got to start being a little bit more careful. It's been an easy short, just selling rallies. I think I think I sold it at 1953, sold it at 1940. I sold it at 1930s sometime earlier this week, I believe. You know, it's been really easy pickings in the dollar Mexican peso on every rally, but we're getting to a level of support where you have to start being a little bit more careful. Tuesday, we have the UK jobs report, Norwegian CPI, and we have a 3-year auction, so the US Treasury auction. I want to talk a little bit about sterling because sterling is still maintaining its breakout. I know it's down a little bit today following the US jobs report, but let's not forget we are still in major breakout territory. While we're above 134.40, it's a bullish breakout. Is it choppy? Is it ugly? Is it pretty? No, it's not pretty. Yes, it's ugly. Yes, it's choppy, but it's still breaking out. So if we saw something like today, like next week, if inflation is weak, this dollar sterling could finally make its way up towards 138, where I think we're going. The bull flag pattern still suggests that's where we're going. So are there going to be, you know, resistances along the way? Yeah, 137 should be a good one. That's 161% extension of this last move. You guys already know that. I talked about it. And then on 138 as well. So and then you got 138, which is 127% extension of this last major move down that you see here. So you got UK jobs on Tuesday. Good jobs report. You could see that that sterling actually continued to rip. I'm bullish and I keep buying dips. And I'm not long right now as of Friday. We have, and if you want to know that, you can actually just go to the trades room and you can scroll down and say, oh, what's the latest position Blake's in? Oh, he happens to be short US dollar Canadian, and his average is 136.80, and it is 136.97 right now. So he's down 17 pips. Oh, if you wanted to know that information, you can find it right here in ForexAnalytix in the chat room. You can locate that right here in the upper right hand corner of the screen. All right. Wednesday we have CPI. We also have a 10-year auction. On Thursday we have producer prices. We have a 30-year auction. So what I'd like to do is I'd like to take you over to the dollar index and show you where we're at. So the dollar index is still in a bear flag pattern. We're closing in on really critical support. Now, I've said this about 1,000 times, probably on the week ahead video the last several weeks, but I'm going to say it again. I believe that the US dollar is going lower. I believe it's going a lot lower. I do believe that we're going to find support really soon. So if we hit a new low, we're going to hit this multi-year trend line that goes back from 2011. That comes in right around 97. So if we break to new lows in the dollar index, I'll be taking dollar shorts off. Not sure if I want to be long dollars, but I will be taking dollar shorts off, as I think this is going to be a very critical support for the dollar. I've talked a lot about this, and I can draw it out for you guys over here. that even though the dollar is making its way lower, it probably the move, and if you're on the F.A.C.E show or the Morning Edge, I've illustrated this for you. By the way, the Morning Edge is our private show for ForexAnalytix subscribers. That if you're a subscriber, remember $1 for 10 days. You can be a subscriber at least for the next 10 days. You could also be on the private shows that we do. See, what I think is going to happen with the dollar is we're going to actually hit hit this 96, 97 level. Then we'll bounce. Then we're going to eventually break, and then we'll bounce, and then we'll eventually make our way lower towards the low 90s as we make through this year. So is it going to be pretty? No. Is it going to be choppy? Yes. Is the dollar going to go down? I feel it's still got a long ways to go. But we're going to have to navigate day by day through a choppy, bearish market in the dollar. And I think unless there's some miraculous Mar-a-Lago Accord that we all of a sudden find out, maybe that'll be the case. We will be following the dollar fairly closely this week because we have so many auctions that are coming out. Now I'm going to take you. I'm going to take you over the 10-year. You can see the 10-year is struggling. It's obviously we've been in this very bearish trend for quite some time actually, for the last several years. If you look at the ZBs, which it would be the 30-year. Let's go over to bonds here. This is the 30-year bond market. Those were the notes. You can see we're sitting on pretty key support. Now, I am a little worried regarding this because we've seen a lot of failed auction results in recent weeks. Whether you're talking about Japan, whether you're talking about treasuries, but what most people think is if bonds go down, yields go up. If yields go up, the dollar goes up. But you have to understand why bonds are going up or they're going down. If the auction results are poor, that means that the market is worried about probably the deficit. And so if the market's worried about the deficit and yields go up, that's not a dollar positive. You have to understand why bonds are going higher, why notes are going higher. And in this case, if there's an auction and it is poor on Thursday for the 30-year, the risk is that yields would go up, but the dollar would be going down. So keep that in mind as you try to navigate through next week. That auction, I believe, all three of those are at, and I may be mistaken here, but I believe they're at 1 p.m. Eastern all 3 days. Let me look at one of my other screens here and just make sure that is truly the case. I just need to double check. It would be on, let's see, Thursday we have, hold on, next Thursday, 30-year auction is at, it's at 1 p.m. Eastern. So at 1 p.m. Eastern, there we go. All right, moving right along, what else is happening this week? On Friday, we're going to have the University of Michigan consumer sentiment numbers. Those are really important because, and by the way, gold, yes, it is still bullish. The thing about the University of Michigan consumer sentiment, it's not hard data, but it is data that can give us a fairly decent sampling on how the consumer is feeling about inflation expectations and confidence. So we'll be watching that data on Friday. All right, moving along, I'd like to cover a couple of different markets. We're going to start here on gold. Gold is still, in my opinion, consolidating. And, we could probably draw it like this, but I still feel that gold is still very well supported. Now, a lot of people think that gold has, performed some sort of blow off top, but I still think that we're consolidating at all-time highs. Now, when you consolidate at all-time highs, that means people still have, they still have the desire to buy gold even at these levels. We've sat here now for literally 2 months at these levels. The longer we don't go down, the more the risk is for continuation higher. And so watch gold. I think if we can break 3,400, we're going to be challenging all-time highs. So what I just said to you is basically this. If we break 3,400, we will challenge all-time highs. So you got to watch that level right there. Okay? Also, I should talk a little bit about Bitcoin. Oh, actually, you know what? I'm going to cover Bitcoin in our review from last week. So don't worry about that. I will get to that. I do want to talk about the S&P since Nick's not going to be here. Once again, I will reiterate. One of the biggest issues I have with the equity markets right now is, well, there's a couple of things. So first of all is positioning. Stocks got hit in April, as you all know, as the Liberation Day hit the market, and that sell-off that you see here, and I'll delete this as soon as I'm done, but you can see that sell-off and that reversal created a lot of buying, but it also left a lot of traders not long, because there's so many people that are sitting on the sidelines saying, Trump is too much of a wild card. This trade war is for real. I don't want to be involved in the stock market. But what happens, the longer we sit up at these levels, the more the risk is of some further upside, because you could be a pension, you could be an institution, you could be a hedge fund, whatever. If you've been playing it safe and you've been on the sidelines, that's fine and dandy until the rest of the market takes off. If the rest of the market takes off and everybody else is making 10, 15, 20% returns, but you go back to your investors and you say, yeah, well, I didn't lose any money, but everybody else is making 10, 20, 30%, what happens? You get redemptions, right? So if the market, that means redemptions, that means people sell your fund and they go into other funds, and then you lose a job. If you're a pension manager, if you're a fund manager, you're a hedge fund manager. So in other words, you're going to have FOMO if we break higher. Now, the flip side to all that is all the news that we've gotten this week, between a good jobs report, yes, the Elon Musk, Donald Trump tussle, as I'm calling it, is that really going to affect the bottom line? No, we got to see how the bill is going to, come to pass. And as long as the bill passes and we extend tax cuts, then stock market should be fine. Then you also have this meeting between President Trump, President Xi. They talked on the phone this week. That should have gotten us higher, but it didn't. And so this market is very much in a very, very pivotal area, and I believe right where we're at, around the 6,000 level, I think is going to give us some guidance. But you know what I would do? You have to realize that if we trade above all-time highs, you trade above like this week's highs, you're going to start to squeeze. You're going to get people chasing the market. It's okay as a trader to chase it higher, as long as you know everybody else is chasing it. So we just try to get in and get out while everybody's trying to buy it. The flip side is if we break this week's lows, then you're going to see more of a reversal. And I think we're at such a pivotal area in the market, you have to be careful. I am going to talk about crude oil, but I'm going to talk about that here in just a moment for the trade setup. So let's go into that portion of this video. Like I said, this is going to be a short week ahead video. I have some personal issues that I need to handle, and like I said, Nick's not going to be here this week. So before I do that, let me just mention, if you guys like what I do here every week for you, rain, snow, sleet, shine, and the rest of our team, even though our editor's traveling on holiday this weekend, still going to get this video out for you early. If you like what we do here and you appreciate it, do a couple of things. Thumbs up down below if you're watching us on YouTube. It's free to give us a thumbs up. It's free to jump in the comments and say, Blake, I do think that the Norwegian CPI is going to be really important this week, so you should have talked about Norway. Great. Jump down in the comments. If you see us on social media, you see a tweet, if you could like the tweet, put a little heart on it, star it, whatever it is, then you can retweet it. I'd really appreciate that. That just helps spread the word. So there's a few things that you can do if you do appreciate what we do here. But giving a thumbs up and subscribing to this channel, because it's free to subscribe so you don't miss these week ahead videos, that's the easy one. Those are easy, and they're free to do both of those. Subscribe to the channel and like the video. I'd appreciate it. Thank you so much. All right. This is the time that I said we are going to talk about the three setups from last week. So the first setup from last week. First one was a good trade. Buy the euro above 113.90 and target 114.75. Well, that happened. We broke out. We hit 114.89, I think. and we hit that and then reversed. So that trade number one, worked perfectly. Just so you guys know, I'm still very constructive on the euro. I think if you missed your exit, I wouldn't really worry about it. I still think the euro's in breakout territory, and I believe the dollar is going to be sold on any rally anyway. So trade number one worked great. Trade number two, long New Zealand dollar on wedge support if we can get it, okay, or on a breakout. Now, you could have traded this. I decided to get out of my Kiwi for a small loss, actually. But I did it because I didn't want to sit through this madness. Now, if you would have bought it on wedge support, you made money. If you would have bought it on the breakout above wedge resistance right here, you could have scalped out of it. You might have taken a loss. You might have, scalped in and out of it as a gain. It really depends how you, as a trader, tackled it. However, if you take it from Friday to Friday, that means last Friday you're like, oh, wait, I'm going to get long the Kiwi and then I'm going to sell it, up here somewhere, and you're still in it, well, you didn't make money. So I'm going to count this one against me, but it did go in the direction that we talked about, and it did do it pretty aggressively on a couple of different occasions. So it depends on how you traded it. But I'm going to say one's right, one, it didn't work. All right, trade setup number three. Bitcoin below 104,000, targets 900 or 97,050. Why? Because we have a head and shoulder pattern that is developing. Whoops, head and shoulder pattern. Let's talk this one out. I don't know why I didn't draw it out for you guys, but I thought I did, but that's okay. Okay, we didn't get close. We got to about 100,000. We bounced, but I still think this is a head and shoulder pattern. That's what we talked about last week, right? But if you just would have sold it on Friday and bought it right now, you would take a loss. So I'm going to have to count it against me. But I think if you're trading Bitcoin, and you're trading it as a head and shoulder pattern that looks something like this, I still think it's playable, and I still think it's in play. So is Bitcoin going to break above 107,000? Maybe. I still think it's correcting currently. So one worked, two didn't. And like I said, if you're in Bitcoin, you might still be short. I still think it's going to make its way down there. But we do it from Friday to Friday, so it is what it is. One worked, two didn't. It wasn't the best week. How about this next week? Well, let's talk about the three setups for this week. So first trade, the dollar CAD. I am short. You saw it in the chat room, and guess what? I'm short right now. Now, one of my colleagues, Stelios Contagoulis, he came on to the Morning Edge this week. He was talking about silver, and he was talking about his trades in silver and how he was trading it. But he also brought up this trend line. Now, we broke that trend line. You can see we touched it here. Let me just draw that out for you really quick. Here, right? You could argue there and here, right? So we broke that trend line and we're below it. Even with a strong Canadian jobs report, but a stronger U.S. jobs report, it failed to take us above 137 on a sustained basis. So while we're below 137.10, I want to be short the dollar Canadian, targeting 135 and change. Now I say 135 and change because we have the 88% retracement down here. You're going to start to get towards channel support. I think somewhere down in this area, you're going to find buyers in the dollar CAD. But I am playing it to the short side as a result. So that is your trade, first trade setup. Short the dollar Canadian while it trades below 137.10. Trade setup number two, crude oil. We talked a lot about crude in recent weeks, and we talked about this very, very tight trading range. Well, if risk starts to break out, where is my crude oil? I keep passing it, I'm sure. Crude. There it is. No, there it is. No, there it is. Okay. So there's crude. So crude is making its way up towards that 65.10 level. So I believe if we break above 65.10, you are going to start to see a squeeze. Now remember, this is, and let's delete a couple of things. This is the 38% retracement. So if you break above this level, we are going to go at least to the 200 DMA and probably a little bit higher. So I want to play the squeeze above 65.20 in crude oil, and that might be as early as sometime next week. Last but not least, and I'm going to go back to my buddy Stelios. We're going to talk a little bit about silver. Silver is breaking out. So I'm gonna delete some drawings here, and I'm going to draw a few things for you. So as long as silver remains above, let me see my notes, above 34.90, which is basically right here, okay, I'm looking for crude to trade higher. Now, that means, hey, you want to buy dips in silver. Did I say crude? I meant silver. So you want to buy dips in silver. Why is this such an important level, and why this breakout's so big? Well, it's not just that. Let's go over to the weekly chart and let's zoom out. Now, if you take this high right here in silver and that low right there, you'll notice that we have just broken the 618 retracement. So what that means is now we're broken out big time. So silver's bullish. And silver, theoretically, I mean, I was targeting $36 this week just because of a double bottom extension. And if you don't know what I'm talking about, I can gladly and quickly show you what that is. So we are looking at this move. Double bottom. There's your breakout. Here's your extension. Takes us to 36. And we basically hit 36, and we've been stalling ever since then. Right, but I still believe it's broken out. So if it's broken out, where are we going? Well, the breakout, theoretically, should take us closer to 40 bucks. So silver is bullish while we're above 34.90. And guys and gals, if you enjoyed this video, make sure you give me a thumbs up. If you enjoy these all the time, make sure you subscribe to the channel, give me a thumbs up, jump in the comments below. And I truly, from the bottom of my heart, I want to thank you for spending your time with me. I know it's your weekend, and I know this is your personal time, and I know that your personal time is very valuable. So thank you so much for spending it with me. My name is Blake Morrow. I'll catch you on the Monday morning show. Remember, we have 2 shows on Monday. We have the Flow Show with Ryan. K-Man is traveling next week to Belgium, so we have Ryan from the UK. He does the Flow Show. Then we'll see him, Dale Pinkert, myself, Stelios, Steve, sometimes Grega on the F.A.C.E show. That's on Monday morning. I'll catch you live there. Thank you all so much for spending your time with me. Have a great remainder of your weekend. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.